KG, it's not looking very good.
It's not. Well, if we actually talk bearish, maybe the market's going to move.
Yeah.
So that's what's actually happening right now. Look, we did have a nice little pop to the upside after hitting that negative gamma area we highlighted this morning at 5,500. Got up to around 5,550, and then we kind of failed. And now we're breaking this channel that we actually established a little bit earlier on before we actually had the initial break to the downside here. What you would have liked to see is actually a recovery of that channel and then a breakout to the upside above 5,550. But no, we're actually seeing a little bit of a break lower here. Now you are seeing some put flows at the 5520 level. This actually happened yesterday as well, where we kind of pinned at the same level that we started seeing a lot of the bearish put activity happening. And the 5500s right now are actually relatively cheap. I think they're only going for about $1.30, which is actually pretty low premium given the proximity of where that strike is at right now. So could we have some pen risk here? That could be the case. If we do see a flush 5,500, there is some put flows also looking around 54.90 to 54.85. But that would have to be an aggressive sell-off. Anything can really happen. But I'm not seeing a lot of optimism on the bull side outside of a short covering rally going into the close here today, Oliver. I would just kind of be prepared for either kind of gyrating around this current level and or flushing to the downside. Okay.
So you're not optimistic for a big ramp?
Nothing above that channel line, that upper resistance area of 5550, which, on a normal day, we would say a 30-point move to the upside would be a major ramp. 30 minutes left to go in the close, but for now, it's really not that much. So even trying to reclaim that channel, we're still going to be down on the session. I don't see anything that's going to be above that, and unless we get a decent market on close number here that's to the buy side, a very aggressive one, and you get some call buyers kind of stepping in, you get these put buyers actually closing out those positions, you get dealers kind of buying back those short futures contracts. That is really what fuels a rally here going into the close. I'm just not really seeing it, and you're looking at it across multiple expirations, right, where you're continuing to see this downside put buying activity taking place. A lot more that have 4 handles on them as well, meaning that they're in the 4,000 level of the S&P 500. So bearish flows continues within this market. A bright spot, though, I'm not even sure if it's a bright spot. Maybe it's not a bright spot. I'm going to stop saying that. Look, if you look at the volume for the S&P 500 composite total volume over the last 4 trading sessions, it has been coming down. So what does that really kind of mean? One, not a lot of people are really kind of trading this or even fading this right now. And 2, maybe you are losing a little bit of momentum when it comes to the volume of flows. Let me just be very specific.
That's interesting.
Let me be specific. The volume of flows, losing a little bit more momentum, but price itself is obviously being exaggerated to the downside. That's what happens in an illiquid type of market here. So I think those are 2 dynamics we have to be perfectly clear on. It doesn't mean that short sellers are kind of losing out and they're not trying to short anymore. That's really not the case. The price action saying so, but it's not increasing or ramping up, and that's something to be mindful of here. We are breaking a key level though.
No, it's important because usually the further down you go, the bigger the volumes get, and the steeper you move to the downside, the bigger the volumes get, just kind of as a back of hand. So the fact that you've now had a couple of days in which the price has broken to the downside, but we haven't done it on bigger, deeper volume. So, okay, we don't want to jinx it. How about volatility, KG? Interesting session for VIX as well, as it was down and then came back up, still below our almost 30 high of 29.57 on Tuesday. What do you make of it?
Yeah, but the backwardation is actually getting smaller and smaller here.
Okay,
so
that's also not bad.
Well, yeah, I mean, it just means that across the curve on volatility structure, it's actually kind of moving up. And,
okay,
and
so everything else is moving up.
Exactly, so it's just normalizing it a bit. Well, I mean, at the end of the day, you would like to see that normalization. I think when you have a massive backwardation when it comes to the curve, or if you're looking at a dispersion index or what have you, that causes a little bit more fear, especially if you're utilizing those within algorithms and high frequency trading platforms. So it's a little bit more of a normalization, which is okay. And from a seasonal standpoint, look, we are actually still on trend. I am actually a very firm believer that we will see vol kind of subside here post OpX. So after next week, and if we kind of look at the seasonality of VIX, we are kind of on trend. I mean, this is a tough time in the market right now. I am actually getting a little bit more bearish though, because we are breaking that channel. We closed below this primary channel that we've been following for the last couple of months here. That makes it a little bit more bearish for me, because it is a huge technical level that we have been following for a very long time here, Oliver. So hopefully we get some buyers to step in at 55.50. We talked about the monthly charts, the weekly charts earlier this morning. Those are going to be bearish. And so unfortunately, longer term time frame, trend still looks like it's going to be to the downside. We haven't seen a counter trend rally, which is kind of unfortunate here, and breaking a key technical area on the daily chart.
Okay. All right. So a few little things in there that maybe suggest some kind of. I mean, look, we are kind of still chopping around a little bit, but it's definitely under pressure, some pretty deep pressure. KG, if it doesn't go well, if we break down and we weren't able to firm up today with the light PPI and good numbers elsewhere, and not a lot of big alarming news from the White House, what's possible to the downside?
I would say 5,400 definitely could be a target that would be a downside target that actually does fill a gap too. We still have an open gap if you kind of look at a longer term time frame down there at around 5,400. Put flows also kind of confirm that as well. You try to ask yourself though, Oliver, where do you actually get a continued selling? You only have around 35%, 38% of the S&P 500 stocks above their 200-day moving average, an extreme low. And so those low beta stocks that have been able to hold up, like the Altrias of the world, Merck's, J&J's, do you start seeing institutions actually selling out of those type of names in order to try to raise capital? And that's it. On one side, you know, it's a little bit of a further deterioration when you're looking at market breadth. On the other side, lower market cap though. So you're kind of hoping for tech stocks to still sell up and not sell off as aggressively. And then maybe some of the low beta is starting to get targeted as far as raising cash. And then I believe that you will see cash being deployed here on an incremental basis. You can make the case on a long-term time frame. This could be a decent opportunity to DCI.
Okay. Yeah, I mean, I think once you're down 7-8%, start going. Keep going, the more it goes down. Thanks, KG. Appreciate it. Good context on the levels. Good look at the intraday session here.